Do you know when to place a trade? I mean, do you know exactly when to actually press that buy button or press that sell button and get involved in the market? This needs to be based on a very specific entry reason. And in today's video, what I'm going to do is share with you what, in my opinion, are the top 3 entry reasons to use in the Forex market. 70% of the trades that I place are placed, that buy and sell button is clicked based on the entries that I'm going to show you in this video, and I'm going to share them directly after the intro and disclaimer. So if that sounds good, make sure you click that subscribe button down below the video to the right hand side. Make sure you click that like button, follow us on socials. Instagram is in the description, and I'll see you directly after the intro and disclaimer to talk about my top 3 Forex trading entries. Alright guys, so before we get started, I actually want to share a quick story with you. It'll only take a couple of minutes, but for those of you who hated story time, in elementary school there is a timestamp below to get you past this story and straight onto the charts. Otherwise, I know that most people, for some reason, believe that professional traders, profitable traders, were naturally gifted with this ability when they were born. They think that you were either really good at math or maybe a genius in school if you've become a professional trader. But what people rarely think about is the time and the sacrifice that it took to create greatness in this industry and in any industry. You see, I started my trading journey when I was about 18 years old. And straight out of high school, I was broke. I didn't know what a candlestick was, and I had no one to guide me through this roller coaster that we call learning how to trade. Even with this being the case, I decided to go ahead and start trading. Was that a good idea? Probably not. Within the first year, I lost a majority of my savings, and this savings was supposed to go towards my first house. It was supposed to go towards any kind of financial burden that would happen in the future, and now, 1 year in, a majority of that savings was completely gone. At that time, my life consisted of going to work at a construction job, getting off around 6 o'clock, and then going home, taking a shower, jumping into charts, trying my best to trade and make profit until about 2 a.m., then going to sleep again for about 4 hours, waking up, doing it all over. These are the sacrifices I'm talking about, and I was so tired at times that I worked construction. Scaffolding is what we worked on most of the time. This stuff was about 15 to 20 feet in the air, and I would literally fall asleep on scaffolding with my head against a wall. That's how tired I would be. That's the kind of sacrifices, again, that I'm talking about that most people don't see when they look at a professional trader. I remember one day, and it's a day I'll never forget. I walked through the door after a long day of work and the occasional nap on scaffolding. I walked over to my computer. I had a trade on from the night before that I was really confident in. I really thought it was going to win. I was so confident in this trade that I ended up risking about 10% of my account value on it. At the time, I didn't know much about risk management. With that being the case, I looked at the computer, saw the trade. It looked like it had almost been stopped out and then won. I got super excited. But as you probably know, spread can be a bitch sometimes. And in this specific case, it was. I looked at my account at the actual numbers. I had lost the trade. I had now lost 10% on top of the majority of my savings that I had already lost. I was devastated and more than frustrated. In that moment, my phone rang. Ended up being my mom. She was just calling to talk about her day, ask me about mine. But in that frustrated mindset, she said one thing that just kind of got to me. And I don't even remember what she said at this point, but I completely went off on her and started yelling and ended up hanging up on her. And at that point, I started to realize that trading probably wasn't something I needed to continue doing with this added financial burden it was causing, along with the added pressure it was putting on all of my relationships with family and friends. But I wanted to try one more thing. I wanted to give it one more shot, so I sat down behind my computer and I started Googling the same thing I always did, which was profitable Forex strategies. I went down Google on the little landing page, on the search page, and I found an article titled, "The #1 Way to Profit in the Forex Market." I was hooked immediately. So I got to the page of the article, and at the top of the article read a few different words. These were 3 words that would forever change my trading and my life. The article read, "Proof equals profit." 3 words I had never heard in the same sequence like that before. I began reading the article and it talked about backtesting, validation, and the proof of concept being the 3 main keys to creating a confident and consistent trader. At the time, I was not confident and I damn sure was not consistent. I was trading all kinds of different strategies and I never knew if it was going to work or not. It was not a good thing. But after reading this article, things started to click. I started to realize that in order to create confidence, in order to create a consistent trading plan, a consistent trading strategy, I needed to have a proof of concept. I needed to validate what I was trading and actually backtest it. So for the next 6 months, I spent those months buried in a computer testing strategies, creating a full trading plan. And yes, it was extremely hard work. It was very difficult to do, but on the other side of that, I started trading again. I had my first green month, and then another. And then within 5 months, I had recouped all of the savings that I had lost and was moving up from there. You see, this proof equals profit concept that I read about somewhere around 9 years ago completely changed my trading, completely changed my life. And because of that, I'm holding a free event next week called Proof Equals Profit. In this event, I'm going to go over everything I learned from that article, along with some of the things I've learned over the past 9 years of my own trading career. And I'm doing this in hopes that it will, 1, keep you from making the same mistakes I did where I lost a majority of my savings, and 2, if you've already lost money, it'll help you recoup some of those lost savings the same way it helped me recoup mine. So if you're interested in attending this live event, it will be limited in the spots we can hold. I think it only holds about 1,000 people, and that will fill up fast. So make sure you click the link in the description labeled Proof Equals Profit and go ahead and sign up for this event. It's completely free, no charge to you. You put in your email address and we'll send you the link to the event. Now, if you know anything about our free content, you know how valuable it is. I believe in giving as much value as possible for absolutely free. If you've been with us on YouTube for a while, you know that. And if you've been a part of our free trainings for a while, you know that. So if that's something you're interested in checking out, then make sure to click the link below and sign up for the Proof Equals Profit event. Now, let's go ahead and jump to today's video content about entries and what the best entries are to use in your trading. All right, for today's entry-based content, what we're going to do first off is jump into a winning pro trader report trade that's going to tie in really well with this. We're going to discuss the analysis behind this trade and behind creating this zone, along with behind the entry reason that we used here, which I'm going to be sharing with you. So it's going to tie in really well by the end of the video, and we'll do some analysis on this at the end of the video. I'll put a screenshot to the left-hand side of your screen over here for proof that this zone is something we pointed out on Monday this week. Now, as for entries, the first entry we're going to take a look at, again, these are the top 3 entries that I use in my trading, and 70% of the time that I press the buy or sell button, it is because of one of these things happening. The first one we are going to talk about, and you are going to be very surprised at how simple these are. The first one we're talking about is the shooting star and or hammer candlestick. They are essentially the same thing, just in different directions. And this is what that candlestick formation normally looks like, something like this. So what we have during a shooting star or hammer candlestick pattern is a long wick to the top or bottom side, along with a small body at the top or bottom side, depending on which one you're talking about. So in this case, let's start off by looking at the hammer candlestick that we have drawn on right here. If this hammer candlestick is your reason for entry, what you would want to do is a couple of different things. You would either want to enter at the close of this candle right up here, or you would want to put a buy stop order or enter a few pips above this candle to make sure the market is going to continue in that direction. Now let's break down these candlestick patterns, because is the secret to trading, let me start like that, is the secret to trading success and your trading success going to be the fact that you now know what a hammer and shooting star candlestick are? No, of course not. You already probably have heard of hammer and candlestick patterns. You've probably watched tons of YouTube videos about how to trade them and what they are and where they are. But I want you to remember back to the story I just told about proof equals profit. The real takeaway from this video is going to be not in the patterns that I talk about, but in the way we're going to use them. So in this case, with the hammer and the shooting star, it's not all you need to know that these patterns are what I use to enter the market. What you need to know is that I have very specific rules for these patterns, and you can create your own rules for these patterns as well. And what is the point of these rules? To validate, to prove the concept through historical data. So for a hammer candlestick, you could say, I need a wick that is 2, or depending on what you want to do, 3x the body of this candlestick, and I need a small top wick. That gives you actual rules to use so you can validate it through historical data. Now, in the same thing here, we could say that we need a wick that is at least 2 to 3 times the size of the body of the shooting star candle. With that being the case, you have a objective way of defining these, because what you don't want to do is be looking through charts and trying to figure out whether or not something is a shooting star or a hammer. You don't want to be confused when you're looking at your entry reason. You want to have set in stone rules that tell you, yes, this is where I enter the market, such as a shooting star candle having the rule set that I need a 3x wick compared to the body of this candlestick. If we have a small body down here and we have a wick that's 3 times that level, I know, yes, this is when I enter the market. That needs to be your rules, and you don't need to do that blindly right now. You'll lose money. You need to do that after you validate this pattern through historical data. Let's talk a little more about that. Validating this pattern through historical data would look something like this. Going back and saying, okay, here is an example of a shooting star candle. You can also make a rule that your shooting star candles have to be red. I don't personally have that rule. My shooting star candles can be red or green. But in this case, do we have a wick that is 3 times the body of this candle? The answer to that is yes. We don't have to measure anything. We can tell that by looking at it. So in this case, would you have won a trade if you went short on this shooting star candle based on our rules? It depends on what your stops and targets are, but it looks like you would have had a chance to win the trade. So with that being the case, this would be a winning scenario, and your process of validating the trade or validating this candlestick pattern would say, yes, check mark, we have one win right here based on a shooting star candle. So your validation process of this, your proof of concept, is going through historical data and looking at every time a shooting star candle happened, did the market drop after that? And every time a hammer candle happened, did the market rise after that hammer candle? This is proving the concept that you already know, but it's going to do a lot in terms of your trading success. It's going to help you create trading success because you now have a way of validating it. You have rules here that tell you, okay, whenever I have a candle with a 3x wick compared to the body in the downward direction as a shooting star candle, do I need to place a short trade? And now we're going to be getting into conditions and stops and targets, but that's not going to be part of this video. That's part of pretty much every other video we've ever done. So if you want some information on that, just check out our YouTube channel. But after having the conditions, you now have a set in stone entry reason of a shooting star or a hammer candlestick that you can go back in historical data and test the conditions mixed with the entry reason of this shooting star or hammer candle that you now have rules for. That is entry number 1 that I like to use. And again, the takeaway from this video, here's another example of this, a hammer there. The takeaway of this part of the video is not that shooting star and hammer candlesticks are the answer to trading success. They're not. The answer to trading success is having set in stone objective rules for these entry patterns and also testing them in historical data in combination with conditions in order to create a strategy. Again, if you want to learn more about conditions, you can find a lot of information about that on our YouTube channel. Just check it out. And our second entry that we're going to look at is the engulfing candle. The engulfing candle is one of my favorite ways to enter a trade. And this is something like what that would look like. Let's go ahead and come over here. And the same concept exists here. You want to make sure not only that you're looking for engulfing candles, you want to make sure that you have set in stone rules for these engulfing candles. So in this case, our green bar would be an engulfing candle based on my rules. So what you want to do is have, again, rules set in place for engulfing candles. For engulfing candles, what you normally want to see is a candle that completely engulfs the previous candle. Now, in the Forex market, We only close the market on the weekends, so every candle is going to end up starting, other than weekend gaps, is going to end up starting at the close of the previous candle. So there's not going to be a way for you to get a lower low on a bullish engulfing candle unless it's over a weekend gap. With that being the case, for me, bullish engulfing and bearish engulfing candles start at the previous close. So the previous close is there. So what I need is a bigger body than my previous candle. That being the case, I know for a fact whenever I get this entry in combination with a bunch of different conditions that I use, that I've validated in historical data, that I've done the proof of concept on. Remember, proof equals profit. I know that I have an advantage over the market once I combine all of those together. And this candlestick formation, again, something I will mention is that I don't just use the simplest form of these candlestick formations. I have different variations of these candlestick formations that I use. And I'm not going to share those here because it's something we go over in the EAP. But what I will say is you have every opportunity to validate them yourself. To create variations of these patterns yourself. For instance, you could go through and test regular engulfing candles every time they happen. And then after gathering that data of the wins and losses based on that, you could go through and test every engulfing pattern that happens after a doji pattern. That's adding another condition that may add accuracy to that engulfing pattern. Now let's take a look at a couple of examples of engulfing patterns on the chart. Here we have one. Directly after our shooting star candle here, we have a nice red engulfing candle. What you would ask yourself is, did the market fall after that engulfing candle? If the answer is yes, then you count that as a win in your validation process. Again, combining these with different conditions is going to actually create a strategy. Right now, you're just creating a proof of concept on different candlestick patterns. In this instance, we have another engulfing pattern here. Market went down. We have an engulfing pattern here. Did the market go up after it? A little, but would you have counted this as a win? That's something you have to decide. So the second one is the engulfing pattern. And again, the validation process of this, you can either do it just with the candlestick patterns, or you can go ahead and create rules. Go ahead and create conditions and test an entire strategy based on your specific rules for the shooting star and hammer candles, along with your specific rules for engulfing patterns. This is what you add to your conditions that you already have. Maybe your conditions are the market's in trend. Maybe your conditions have something to do with indicators, overbought or oversold. Maybe your conditions have something to do with market structure, resistance, support, multiply tested levels. Whatever your conditions are, combining these entries with those conditions is how I make profit, or with my specific conditions is how I make profit in the Forex market on a daily basis. 70% of the entries that I place are based on those two candlestick formations and a very well-known price action formation we're going to talk about right now. That price action formation is double tops and double bottoms. Again, super simple formulas, but when combined with the correct conditions, combined with the correct stops and targets, and combined with the correct risk management and discipline, even the simplest entries can provide a massive edge over the market, which is something I've seen in my own personal trading. With double bottoms and double tops, I have very simple rules for these that I will share with you right now. Again, these are the most simple form of these patterns. I have variations of these patterns that I use, and you are more than capable of creating variations of these patterns on your own. In this case of double bottoms, I look for my first bottom. I look at the bottom of the body and the bottom of the wick. What I need to see is at least a wick touch the bottom of the bottom of the body of this candle and not close below the bottom of this wick. I have a full video about double tops and double bottoms where I share these rules. And in the case of the dollar yen trade that we just looked at, let's bring this over. The dollar yen trade that we have our Pro Trader report pointing out the zone of last week. I'll put that right over here, the Pro Trader report. And in this zone, what we have is a good example of exactly what I look for when it comes to double tops. What we got was a push up to this initial top. We then get a pullback, a push up again, and what we see after this push up again is, did we hit the bodies of this top with a wick? Yes, we did. Did we close above the top of this wick? No, we did not. With that being the case, this was an entry that I was interested in, and considering the conditions I had already created, I actually placed a trade based on this and ended up having a pretty big win still in the second part of that position right now. So here are the examples of 3 different entries that you can go into your trading with. You can make variations of in order to increase the accuracy of these 3 entries. You can add them to the conditions you already have, or now you have a way of knowing how to create conditions with trend, structure, and indicators, combining these entries with those, and again with a great risk management plan and good discipline will help you to create the successful trading career you have dreamt of. And that's going to do it for today's video, guys. Again, if you're interested in the Proof Equals Profit lesson, the Proof Equals Profit event that we're doing next week, make sure to click the link in the description labeled Proof Equals Profit and sign up for that event. Spots will be limited, so hurry over and do that now. If you're interested in checking out any of our paid content to get a grasp on the exact entry reasons that I use, along with the exact conditions I use and strategies to get personally mentored by me, then there is links in the description for the Pro Trader Report and the EAP training program. Check those out if you would like to. If not, that's totally fine too. Make sure you are subscribed here to the trading channel to keep getting extremely valuable content just like this each and every week. Click that like button for me. Make sure to follow us on the socials. I wish you the best of luck in all your future trades. Trade green, and I'll talk to you in the next video.